Nvidia. Of course, big earnings this week, not just important for Nvidia, Vana, but important for the market, for the index, kind of as also a gauge of that risk-on appetite. Let's go through the reasons, Vana. You say Nvidia, even after a big move, it's still a buy. One, stronger Hopper cycle than expected. Explain that bullet to us.
So Josh, Hopper is their current chip that is in production, and what we're hearing from their customers is while some people expected to see air pocket in demand in between the past generation and the next generation, orders for Hopper are actually stronger. And several companies that reported said this publicly, like Microsoft and Snowflake, they were actually not able to deliver or outperform on their numbers because they didn't have enough of these Hopper chips to sell to their customers as a service.
So still strong demand for Hopper. The second bullet point is going to be an interesting one in the report and the call. Blackwell chip bright spot. Now here's why that's important, because we've had these reports of the shipment delays for Blackwell. So what do you see here?
That's right, Josh. So most analysts at this point took out Blackwell numbers from earnings estimates from this year. And we already know that there have been several deliveries of Blackwell to end customers. So we're more optimistic than the market on Blackwell here, specifically on the order delays or the system delays. Those relate just to Blackwell systems entirely composed of these Blackwell chips. But the Blackwell chip itself is already in production. And I think that's the big misunderstanding in the market right now.
And even if there were delays, are you in the camp as a bull, I'm guessing you are, that if there were delays, you would see a sale that's delayed but not ultimately destroyed?
That's right, Josh. So the key thing that we're really tracking here is end market demand. So whether these AI applications have uses, whether hyperscalers will keep growing their CapEx spending, those are really the most important things. If there are delays, they would likely be maybe a disappointment to the guide or pushback to the guide. So that would be usually a one-quarter impact. But the key for long-term investors is whether there is end market demand for NVIDIA's product, which we see right now as being
ahead of its highly anticipated second quarter earnings later this week and a significant price target raised from a top Wall Street analyst, Nvidia shares nudged higher in early trade on Tuesday. Despite some delivery delays and supply chain constraints for its key AI-powering chips and processors, Nvidia's shares have risen more than 13% from their early August lows over the past month, far outpacing gains for the broader Nasdaq benchmark. This increase has come despite concerns that AI demand will continue to accelerate well into the second half of the year and beyond. According to reports, the company's recently introduced Blackwell line, which is expected to generate up to $150 billion in data center sales for the company the following year, has certain design problems that could cause it to be delayed in reaching important NVIDIA clients until later in the year. Analysts had predicted that Blackwell would begin to boost NVIDIA's top-line growth in the third quarter and make their way into customer data centers throughout the globe by the last 3 months of the year. At a Taiwanese event on Monday, Barry Lam, the CEO of Quanta Computer and a crucial link in NVIDIA's server building supply chain, stated that his business shipped AI servers equipped with vintage H100 and H200 Hopper chips throughout the second quarter and is expecting triple-digit revenue growth this year. In a report released last week, KeyBank Capital Markets analyst John Vinn stated that Blackwell shipments in the fiscal third quarter have been backfilled with higher Hopper bookings, and that the delay would not affect the company's near-term forecast or second quarter earnings. According to Wall Street estimates, profits will likely total 64 cents per share, up 137% from the previous year, while revenues will more than double to $28.68 billion. In May, Nvidia informed investors that revenue for the current quarter would reach approximately $28 billion. This higher-than-expected projection at the time allayed investors' fears regarding delays in receiving orders for H100 chips related to the Blackwell launch. In a note released on Tuesday, William Steen, an analyst at Truist Securities, increased his price target for Nvidia by $5 to $145 per share while maintaining his buy rating. Fundamental and emotive elements seem to be improving for the corporation, he said. Prior to the tech giant's July quarter reporting, Stang and his team stated, "Our regular dialogue with component buyers and sellers reflected NVIDIA business trends continuing to improve." He went on to say that this, along with publicly accessible statistics about AI investments and adoption, led us to slightly improve estimates, moving his full-year earnings target from $3.39 per share to $3.61 per share. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the markets. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
The week investors have been waiting for since the August market sell-off. Yes, Nvidia will report earnings on Wednesday after the market closes. The company is expected to address the Blackwell delay issue on the call. Joining us now to talk about Nvidia and how that can impact big tech and overall market sentiment is Gene Munster, Deepwater Asset Management Managing Partner. Gene, thank you for being here. Important big week. You think the odds are skewed that Nvidia actually trades down on earnings. Why is that?
Well, you hit the pressure point right out of the gate there, and that is, of course, related to this Blackwell delay. Last quarter, Jensen Huang said that they're going to have a lot of Blackwell demand, a lot of Blackwell revenue, specifically in calendar 24, and I suspect that that's going to be modest revenue. We're talking about a 3-month delay, and ultimately I think that for investors who are just hyper-focused on every minute of what this company is doing, that could be viewed as a slight negative. Also keep in mind the stock is up 30% over the last 3 weeks, just shy of 5% of its all-time highs. And so there's just a ton of noise around the quarter, but I think this Blackwell piece is probably the most important X factor about the quarter. And so that's kind of why I think that the stock is going to trade down modestly. But I don't think that stock action should be representative of the opportunity Nvidia over the next couple of years.
So, I mean, this is a company that does have a history of over-delivering, regardless of the promises it makes. Do you think this time will be different? And if so, if it does trade down, do you think the knock-on effect for other big tech names could be even more sizable in magnitude?
I think that's the risk this week, of course, and just to zero in on the next 5 days is that the market is going to be, this is the only thing that matters to the AI trade this week. It's obviously the biggest factor in general, but of course with the earnings. And so, yes, I think that if there is a modest pullback, I think if there's anything around Blackwell, I think that could be perceived as a negative for kind of broader tech, that especially the mega caps that have enjoyed some of this AI movement here. I still think we're very early in this. But again, I want to frame in that I think that trading in the near term doesn't impact what's ultimately going to happen. And I think that investors are going to get hyper-focused this week, but it's ultimately going to probably miss what I still believe is the biggest opportunity we've seen in 20 years. I still think that we are in the early innings of a 3 to 5 year tech bull market that's powered by AI. And I think that many of these big tech companies are going to do well over the next couple of years as that starts to go. So yes, I think this is going to be probably a more difficult week for broader big tech, but I think that ultimately shares are going to recover quickly as investors come to grips with, I think, is a stronger AI trade than what many believe is today.
According to estimates from Barclays, hyperscalers, the leading suppliers of enormous data centers and cloud services, are expected to invest roughly $500 billion over the next 2 years in expanding their massive infrastructure. This is because they plan to use their data sets to improve sales of everything from drive-through meals to the most intricate pharmaceutical testing. According to technology market researchers at Analyst, investments from Amazon, Microsoft, and Meta Platforms drove the 19% increase in cloud infrastructure spending during the second quarter of this year, which came to approximately $78.2 billion. Based on predictions from Barclays, hyperscalers are expected to invest over $500 billion in expanding their huge infrastructure over the next 2 years. The business that has contributed most to the Dow Jones Industrial Average, S&P 500, and NASDAQ Composite reaching all-time highs will be revealed tomorrow, August 28. Wall Street will be able to assess Nvidia's operating performance during the last 3 months, as the company will be removing the proverbial hood. Perhaps even more significant than any of the data releases I just discussed is this one. While Nvidia's sales and net income are likely to be the focus of attention for investors, there is a much more significant measure to look for that will give a broader context on the state of the artificial intelligence, AI, revolution, and NVIDIA's future. It is essential to give background information on how we arrived at this point before delving deeper into this crucial parameter. Put otherwise, an explanation is required for NVIDIA's explosive growth from a market worth of $360 billion at the end of 2022 to a valuation of approximately $3.2 trillion as of August 23, 2024, the closing bell. This historic move is being driven by AI, as you may have correctly surmised. High compute data centers quickly adopted NVIDIA's H100 graphics processing unit, GPU, as their GPU of choice. These chips are essentially the brains of generative AI solutions, large language model, LLM, training, and split-second decision-making. Unquestionably, NVIDIA has benefited greatly from its NVDA software platform as well. The toolset used by developers to create LLMs and maximize the performance of GPUs is called CUDA. In order to retain enterprise clients faithful to NVIDIA's ecosystem of products and services, NVDA and the H100 are collaborating flawlessly. The fact that enterprise demand for NVIDIA's AI GPUs is far higher than supply is the second crucial component of the problem. A good or service's price often rises until demand taper-offs when supply cannot keep up with the demand. The average price range for NVIDIA's H100 is between $30,000 and $40,000, more than twice as much as the competing advanced micro devices chip, the MI300X. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Look at your final bullet point here. Final one is systems contributing to big order numbers.
So what this means basically, as we get into next year, we're seeing companies order big systems. So not only Blackwell chips to replace their current Hopper or previous architectures, they're building entire data centers, and some are even talking about 1 million GPU clusters. So that would be significantly higher than even the current market is something like $4 or $5 million unit GPUs. So there will be significant increase to the numbers for next year. Just these systems on their own could add over $100 billion to revenues.
So that's the bull case, Yolanda. But before everybody piles in, Ivana, walk us through some of the downside risks to NVIDIA that you see.
So, George, we spoke about it a little bit. Supply chain delays and them not delivering on time by like 3 to 6 months, that could really push back the numbers in the short term. That for us would be a buying opportunity. On the other hand, if we do see a slowdown in demand or period of digestion where companies that have already ordered these chips need to spend some time to actually put them to use, that would actually be a cyclical downturn. These are hardware stocks, so they could see down cycles as well.
Do you ever, Ivana, as a bull, do you ever get nervous when everyone seems to be on the same side of the ship? Like, everybody loves NVIDIA. I mean, I think something like 90% or something like that of analysts tell their clients this was a buy. Does that get you nervous, or do you think, sometimes the herd can be right?
Absolutely, Josh. We're very nervous all the time, and this is why we do deep dive.
That's why you're a good investor. You're staying nervous.
This is why we do deep dive work and really keep doing these channel checks, keep talking to customers, understanding what their needs are, what are going to be the use cases, and that's kind of how we build conviction around earnings and long-term thesis.
All right, so you like NVIDIA.
When examining NVIDIA's fiscal second quarter operating results, which are scheduled for release after the closing bell on August 28, bear this AI GPU scarcity in mind. Over the last 5 quarters, or the full fiscal year 2024, and the first quarter of fiscal year 2025, NVIDIA has utterly defied Wall Street's most optimistic sales and earnings projections. Given that Wall Street experts have a track record of beating consensus estimates, it wouldn't be at all surprising if NVIDIA's net income and revenue exceeded forecasts once more. However, the picture is not fully told by these two headline figures. Consider NVIDIA's gross margin for a more comprehensive understanding of the company's state, as well as the state of the AI revolution. When analyzing NVIDIA, I usually focus on its adjusted gross margin, which takes acquisition-based costs and stock-based compensation out of the equation. The world's top chip manufacturer, Taiwan Semiconductor Manufacturing, has significantly increased its chip-on-wafer-on-substrate capacity, which has helped Nvidia sell more H100 GPUs. However, the majority of Nvidia's growth has come as a result of its extraordinary GPU pricing power. Nvidia's adjusted gross margin jumped from 64.63% to 78.35% in just 5 quarters due to its capacity to charge between 50% and 75% more than competing AI GPUs. After the fiscal first quarter results of Nvidia, which concluded on April 28, the management requested an adjusted gross margin for the fiscal second quarter of 75.5%. This would indicate a decrease from the previous quarter of between 235 and 335 basis points. Although this could simply be management being cautious as costs of goods rise in tandem with new orders, a significant drop in adjusted gross margin could potentially indicate a change in the AI environment. Once again, the central thesis has been the scarcity and strong demand of AI-driven GPUs. Competitive pressures would become evident very quickly if Nvidia's adjusted gross margin falls short of its earlier estimate or if its outlook necessitates a further retraction in gross margin. Even if there is a sizable backlog of orders for its Blackwell chip, it is possible that companies will choose to use less expensive AI GPU substitutes that they can acquire more quickly. There are first-mover advantages in the AI sector, and some companies won't want to have to wait months for their orders to be filled. This makes it easier for Samsung, Advanced Micro Devices, and other hardware manufacturers to pilfer priceless real estate from AI-accelerated data centers. We may also determine whether Nvidia is facing internal competitive challenges by looking at its adjusted gross margin. The Magnificent Seven, which includes the 4 biggest clients for the company, account for about 40% of Nvidia's net sales.